The views and opinions expressed on the following program are not necessarily those of the staff and management of Salem Media of Hawaii.
Welcome to Generations Radio, where the focus is on our seniors and their families. We are here each Saturday afternoon from 5 until 6 p.m., bringing you resourceful information with our radio team of professionals in the field of aging. Stay with us for the next 1 hour as we explore different ways to make life more exciting and meaningful for our extraordinary seniors. Right here on AM 690 The Answer. And now, here is our host and the publisher of Generations magazine, Percy Ihara.
Thank you, and welcome to Generations Radio. I am Melissa Mansfield, and I'm here with Percy Ihara, and today we are going to talk about reverse mortgages.
Reverse mortgages, Melissa?
Yes.
So a lot of people don't know, as we've talked many, many times, that, I got involved with aging because of the reverse mortgage business, and that's one of the things that a lot of people, have asked me, and to this day still ask me for reverse mortgage questions, or say, are you still doing the reverse mortgage? Because people know me as a Generations magazine guy,
right?
But yeah.
You had asked me what do I know about reverse mortgages, and my knowledge is very slim because it's not really talked about. I know it's an option out there for seniors, or just
they
anybody.
didn't cover in gerontology class?
They didn't. It was an option to pay for health care services. So it was more of just in the back of your mind knowing that you have that option if your house is worth something or has a profit to it. So could you explain to me and our listeners, what is a reverse mortgage?
Yeah, well, let's back up, because one of the things I always try to tell people is that I've been doing mortgages in general, residential, commercial, since 1988. And about the early 2000s, I was getting kind of restless. The market was busy. Everybody and their sister was a realtor. Everybody would be a mortgage solicitor, because back in those days, to sell or offer mortgages in general, all you had to do is sign a piece of paper. As long as you didn't have a felony against you, you just sign a piece of paper and you're a mortgage loan officer. And that was just after the subprime boom. And, it was still kind of booming, but I just got bored, and, I'm always looking to learn. And one day a buddy of mine says, there's a guy in town looking for people to offer what's called a reverse mortgage. Mm-hmm. And I said, and he goes, Percy, you know what it is, right? And I've been in mortgages since 1980. This is like 2002, 2003. I go, I think so, a little bit. In fact, I remember about 1993 or 92, a bunch of mortgage people back in those days only had about 100 people that I knew in this industry. Today it's probably over 1,000, 2,000 people. But back in those days, about 100 people. We went to an office down at the HUD office downtown, sat there for a 2-hour meeting. We walked out of that 2-hour meeting about reverse mortgages. We all looked at each other and goes, what was that? Because we have that forward mortgage mentality where you make a payment, and that payment for the first few years goes to interest and principal, and slowly your mortgage goes down. And that's how life works for real estate and mortgages worked. And so nobody ever did a whole lot back in the 90s. And in 2000, my friend said, you know what? You should really look at this, because you might fit this product. And actually, I was thinking about going into a career of financial planning, by the way.
Oh, wow.
And actually to sell long-term care insurance, because I've always been looking forward, and I knew that and saw this with studies and research that people, as you aged, people need to start worrying about having enough finances, retirement planning, and then long-term care slowly became a little bit of a issue for people. And I knew that. So when I did my research about this product, I was like, it only touched 1/10 of 1% of the potential market, the reverse mortgage. Wow. Back in 2003. And I looked at that, and I'm close to my parents. My grandparents had passed away already, but I could see the future in aging, that it's going to be a vital tool. And so I just decided to take a leap of faith, and I make 14 years in February.
Wow.
Next year, and so the rest is history. But the funny thing happened that after about 6 months, I'm sitting in front of seniors. At the time I was 45, 46 years old, 45, 44 years old. And I knew nothing about their life. Here I am, I'm 40-something years old. I'm sitting in front of a 65, 70, 80-year-old, not knowing what's important to them. I knew nothing about fall prevention or Alzheimer's or cancer. I knew nothing about retirement planning, Social Security, Medicare, and Medicaid, zero.
You're trying to identify with them, but not really understanding that connection.
Well, the connection, but also how can a reverse mortgage help them? And so I really took a deep dive, and joined the American Society on Aging. Started reaching out to different, looking around town what was available for resources. And back in those days, 13 years ago, not a whole lot.
Right.
So
Not much has changed today.
little bit by little bit.
Yeah.
Generations Magazine, and that's what happened was, I realized that there wasn't a lot of resources out there. And, I needed to be the resource for my clients. Was every day, every week, somebody would call me looking for information. And so I had to go look for it for them.
Right.
And then I had an idea. We did today's Kapuna television show on Olelo. We did over 52 topics on Olelo in the mid 2000s, and then we did radio a little bit back then too. But it's just something that's evolved. And so when you told me about you're going to learn about aging and everything like that, I thought good time to understand the financial side of aging in place, and that's one of the names of my workshop. But so it's a long roundabout answer how I got into this business, and it's really the story that I tell a lot because, as our own parents age, like your mother and my parents, we really need to be there for them. We really need to understand, the whole aspect of aging. Because I get calls almost daily from children and people my age dealing with their parents, how to do things, who should they call, in fact, I just talked to my neighbor this morning, rushing around. Somebody called me again this morning saying, what do I do about this? And so, your original question was, what is a reverse mortgage? And it's a long answer. So we'll do it in parts because we have an hour here. But it's simply a line of credit. It's simply a pool of money that one qualifies for based off of the youngest borrower's age.
Okay.
So the minimum age is 62. So the government created this thing in the late 80s. And actually, believe it or not, the first study on reverse mortgages was done in 1968 or 69 by a guy by the name of Bung Chung Peng or something like that. I still communicate with him every few months. He lives in Seattle. He worked for the federal government, and he was more an actuarial guy. And he did a study back then because, he knew that as we aged, we're going to need some form of financial support. And he was only in his late 20s at the time, Dr. Chen. And he did a study and said, this is a great way to live longer, healthier, and from a financial point of view, have equity you can pull out of a home to live life. Mm-hmm. And I said, Dr. Chen, but the reverse mortgage didn't start till 1988, 89. He goes, I know. I did a second study in 1979, I believe. And he said, the government needs to start looking at this because people's home equity, hopefully you paid off your mortgage then, home equity is going to be a key part of living longer.
Right.
And he was absolutely right.
And in your home. So in order to qualify, do you have to pay off your home?
Good question. Yes. That's a very common question, but no.
Okay.
If you have an existing mortgage now, you have to qualify for a certain number and a certain loan amount, equity line. And as long as that loan amount can pay off the existing mortgage, they're good to go. So it's really hard to talk about numbers because when I talk to realtors, financial advisors, attorneys, there's so many little idiosyncrasies about the reverse mortgage that we don't use what typically people do is what's called loan to value, right? Mm-hmm. Typical conventional mortgages, you say, well, how much down payment do I have to put? Typically it's 20%, correct. Sometimes, 10%, depending on what kind of secondary financing they have. But it's really just a simple number, $625,500. That's the threshold that we in our industry of the reverse mortgage use as the maximum value we're going to qualify you for. So we use 625, and the loan amount goes down the younger you are. And so, in other words, for roundabout sakes, don't quote me on this because you're recording this. But so let's say you're 62 years old, you have a home that's worth $625,000. you're going to get a line of credit in the low 300s.
Okay.
If you're 80 years old, you're going to get a loan amount or line of credit about near around 400,000. Just for round numbers' sakes. And so if the mortgage is less than 300,000, we would pay that off, and the rest goes in a line of credit. And they have no mortgage payments for the rest of their life. I mean, I had a lady just passed away, unfortunately, recently, but she had a reverse mortgage for 20 years.
Oh, wow.
Can you imagine living 20 more years with no mortgage payment?
I would love it.
And so, that's the beauty of it. And so we'll cover the downsides later on. But yeah, simply as long as we can pay off the current balance, we're okay. I have a lady right now, her balance is $350, but she only qualifies for about $320. So she has to pay that mortgage down by at least $30,000. She's young. She's like 64 years old. And she wants to live in a home for the rest of her life. She expects to live to 90, which is 26 more years. So she's planning on banking that I'm not going to have a mortgage payment for 26 years at least. I love this place. I've been to her house, beautiful place, and it works for her. So one of the key things when I explain the reverse mortgage is that everybody's situation is different. Everybody's financial situation is different. Everybody's family situation is different. And everybody's health is different. We don't know how long people are going to live.
Correct.
So it's really important to take every situation different and special, because when I walk into people's home, I have a blank piece of paper. And we just start taking notes because a lot of people, have certain things they think about what the reverse mortgage is and is not, and whether they qualify or not. So we just start off from a raw piece of paper, and we kind of walk through what's life going to be like, and
what your expectations of life will be like.
Yeah, and we have to plan for the worst case scenario. I was talking to a lady this morning. She said, "Well, I don't plan on using it." I said, "Well, do you have a lot of funds and reserves?" She goes, "Not really." Well, okay. So you have long-term care insurance? No. So I said, as you age, we don't live perfect lives. And so what's going to happen if your husband, which I hear your husband's not doing so good, when he needs care? Well, that's a good point, Percy.
Yeah. And also maintenance of the home. There's a lot of times when I go to seniors' homes, the maintenance and the upkeep of the home have, over the time, the house isn't being painted. Numbers, even like the simple numbers on the address, are gone.
My neighbors just fell off yesterday.
Yeah.
I saw dangling on the roof. I was like, what is that thing dangling from the roof? It was the sign of the address of the home.
Yeah, I thank goodness for GPS, because sometimes it's the only way I can find the home. I have to call them.
That's right. You go to homes too.
I do. Yeah, I have to. Are you in the yellow house? Because I don't see the address on. And then it's not painted on the sidewalk. But
yeah, it's really important. People need to understand that as we age, nobody really thought about living to 90 years old, but today that's pretty standard.
Common.
I think men is like nationally like 76 to 78. I think Hawaii is more like 85.
Right.
But for women, it's like 90, 85 to 90. I think it's way more than 85 today on average, because we live such healthier lives here in Hawaii. But yeah, the home, I just talked to a lady this morning. In fact, I was going to go work out, and one of the other ladies that works out after me, the daughter came in to want to talk to me about her neighbor. And so I asked her questions, and I got to the house. She goes, "Oh, it's not in good shape." I said, for people that are listening, today in lending, if your house is not in good shape, if it's in disrepair, it's very hard to get a loan today.
Yes.
Any kind of loan today.
Yes.
So there are a few banks that do a portfolio loan that may do a loan where they don't require an appraisal. But the loan amount is not going to be a lot. So I told her, we'll meet later on and decide maybe we have to sell the house.
Yeah.
Yeah.
What about, okay, so you get your line of credit, and what if you use the line of credit? Can you refinance or reapply, or is there a way to increase that line of credit?
Well, that's twofold question, because a line of credit actually grows automatically.
Okay.
So I was sitting with a longtime buddy of mine yesterday morning for coffee, because he had a client that was looking at a reverse mortgage, and we're talking about their situation. And I said, let me show you, Steve, this situation of the line of credit. The line of credit, let's say it starts at, for round number 6, just $300,000. If you don't need the line of credit right now, don't touch it. Leave it there, because the reverse mortgage has a unique benefit that's built into the product itself. It's what's called a credit line growth rate. So the credit line growth rate grows every month, every year, whatever balance is left in the line of credit, by the percent we charge them. So every year automatically grows no matter what, as long as there's money in the line of credit, and it has nothing to do with the appraised value.
Okay.
Because my friend Steve said, so if the value doesn't go down, does your line of credit still go up? Yes.
Oh, okay.
That's a unique benefit of the reverse mortgage. So I showed them on a little amortization schedule showing the $300,000, and in 10 years that grows to over $400,000, and that's guaranteed to them.
Oh, nice.
See, what's hard today is because of the financial crisis of 2008, 2009, a lot of banks and credit agencies now, before that time, they would give out a line of credit of $200,000, $250,000. But since then,
very
a lot
reluctant.
Are pulling back.
Yeah.
No, they're reducing people's line of credits.
Oh,
yeah,
I didn't know.
in half.
I thought it's harder to qualify for line of credits.
That it is today. But people that had a bigger line of credit, like $250,000, we're seeing credit agencies, credit unions, and actually banks reducing their line of credit.
Oh, wow. Okay.
Because they don't have to get requalified if they want to keep that bigger line of credit. But yes, today, I work with a lot of banks because if they can't or don't like the reverse mortgage, they still need funds. So I try to get them, talk to my friends at various different banks in town and try and get them qualified. But it's very difficult because you have to have a certain FICO score, the credit score.
That's true.
They also have to have income to qualify for that line of credit. So it's a little harder today, and lending is not as friendly. And you can go down to your local banker today, not anymore. So people have to be very, very careful. So the line of credit, you can refinance the line of credit. The lady earlier I told you that had it for 20 years. I knew she had it for 10 years, and I met her actually at a meeting for seniors, and she was going to get a divorce because her husband, they were breaking up, and she needed funds to pay him off.
Oh, wow.
Well, fortunately for her, in 10 years, the value had more than doubled, and our lending limit actually has grown since then. So we were able to give her a little over $200,000, pay the ex-husband off, and she got a new reverse mortgage, and she had it for 10, 11 years, and she recently passed away. So
it's a great concept. My mom and father are getting a divorce, and so she has to. She wants to keep the house, so maybe I'll mention to her to look into reverse mortgage. So
it's just a financial tool today. It's really important to understand, the product today, and we'll cover that more. But the product today is much safer. The rates are still pretty low. And I think people are educated enough to ask good questions. Like you're asking a lot of good questions. You're not even a senior. But it's really important because back when I first started, 2003, 2004, it was a last resort. People had already run out of money. They didn't have a whole lot of income. Most of my clients back then were widows. The husband had passed away already. And now they realize I'm sitting here with a lot of equity. I don't have a whole lot of income because back in those days, I noticed a lot of husbands did not take a life benefit for the spouse. So when they passed away, they lost all his income. They didn't have leftover income. So they were living on one Social Security only. And so they were living longer, but they saw this equity. And they had used up all their funds because the husband didn't believe in a reverse mortgage. So by then they have $10,000 left in their pocket. But they had like $500,000, $600,000, $700,000 equity. So they would use a reverse mortgage. A lot of times when people were using it for healthcare and long-term care, back in those days. Today, flip it forward, we're seeing it you really use as a financial tool. But it's interesting when you mentioned that your gerontology class talked about how it can pay for long-term care. When I first started, I was telling my friend Steve yesterday morning about this. When I first started, nobody wanted to talk to me. ARP, the city office on aging, the state office on aging, who I knew, they didn't want to talk to me about reverse mortgages. They said, "Oh no, stay away from me." I would have people, they would see me and say, "I don't need a reverse mortgage, bye-bye." I would call people, they would never call me back. Until April 15th, 2004, I was doing some research online. I've always been a big research person in studying, especially in our generation. I do a lot of research on aging and I find out the information that we really need. And I ran across an article. There's a big entity called National Council on Aging that's in San Francisco. They have a DC office too. But I happened to run across an article. It was a press release about a study they did in April 15, 2004. And the first line of the press release through the studies, they said they found the reverse mortgage might be a good way to pay for long-term care.
Exactly.
This is in 2004. Now we're at 2016. And so I blasted that email out to all the people I knew, and sure enough, the phone started ringing. Come and talk to me. You know,
Yeah.
if the National Council on Aging is a little bit different than ARP, you know, they're just a think tank. They're a nonprofit. They don't have any other entities on the side that they work with. So they do a lot of good consumer work, and research and studies. And once I did that, the light went on for a lot of people, especially financial advisors.
Right.
They were still dealing with long-term care back in the early 2000s. And from that point on, I really took a deep dive of really understanding long-term care, to the point today I'm very versed in all the different options to finance long-term care. And it's really important to understand that when, you know, people worry about when I die, what my kids are going to get. Well, we got to worry about what's going to happen before that.
Right.
And that's the long-term care.
And
part.
how are we going to pay for, number one, our health care, and number two, who's going to pay for a funeral? That was another topic that was brought up in one of my classes. And therefore, the reverse mortgage will help you settle your debts, pay for funeral costs, burial costs, so your children can grieve, have the grieving process, as well as remembrance of you.
Well, the good part about what you just said is that coming in our December, January issue, Validated Temples are coming into the magazine as a partner. And they do a lot of workshops. And that's one of the things they're going to be doing is telling people just that. You need to start planning for that. It's very expensive to die in Hawaii.
Yes.
I mean, no kidding. I mean, you can, a lot of people are opting for, what do you call that?
Mausoleums?
Mausoleums or, cremation.
Cremations, yes.
Cremations. And it's a lot more inexpensive, but, you know, typically you want to have some kind of a party, right? Or some kind of a get together, right? That costs a couple of $3,000. But yeah, the final expenses is, we're seeing a lot more commercials, by the way, for final expenses. But that's one of the things the reverse mortgage actually can help the family. But typically, once you pass away and once the lender finds out, you cannot draw any more money out. So hopefully the family drew out money before they died.
Right. So can we jump into what happens after you die? What happens to your home?
Sure. It's like the reverse mortgage is simply a mortgage. That's all, a line of credit. It works the same way. Actually, it works better. So on a regular mortgage, when you pass away, the lender finds out, they'll tell, okay, Melissa, you need to pay us back right now. You know, if you don't, somebody's got to keep on making that mortgage payment, right?
Right.
Because that's required every month. So 3 months, 4 months down the road, hopefully you're making a mortgage payment. Because, you know, man, today, ever since the financial crisis in the late 2000s, man, they're really worried if you're going to be foreclosed upon. So if you make one mortgage payment, 2 mortgage payments, red flag goes up, you're going to start getting calls. And I've seen lenders put on what's called a pre-foreclosure lien.
And what is that?
That means that once you're back 3 mortgage payments, they actually put on title. I've seen it. It's called a pre-foreclosure lien because they want to kind of, I wouldn't say scare you, but I'm seeing this where it's on there. So once the client gets current with the mortgage payment, because this happened to me before, I called up the lender and said, you know what, they're current now. We're going to pay you guys off. It goes, so you need to take the lien off. He goes, oh, we're not taking the lien off.
Oh, wow.
Because what happens if you don't, and they don't qualify, and then they continue to not make payments.
Right.
So they said they'll never do that.
Oh, wow.
So we're seeing that. But it's you know, when you pass away with the reverse mortgage, we give you 6 months to pay off or refinance or sell the house. And if you need 6 months more, up to a year, you need to put something in writing to the lender and saying you need 6 months more time to either sell the house or refinance or pay them off by cash. So it's actually a little bit better than mortgage, because on reverse mortgage, during that time, you don't have to make mortgage payments.
Right.
Now, interest is building up at that time. So I always tell families, you should always try to do it as fast as possible. But, it depends on your siblings. You may not get along. Maybe there's issues with the title or the trust or, getting rid of the assets could be an issue. So that's why it's really important as your parents age to really stay close to them. Talk story like, this is December and pretty soon now. So during this holiday season, we always recommend you have these difficult conversations.
Right. That is very difficult.
I wouldn't say pry open, but just ask, so Dad, we're all going to pass away. You know, uncle passed away, and, you know, so auntie and uncle and my cousins are dealing with that. And so we need to make sure that we have all the paperwork. We know where the asset's going to go. Hopefully have a copy of the trust, power of attorney, and even the funeral home plan too.
Mm-hmm. So it's all about being prepared for that time, because everybody will go through the situation.
Yeah.
So it's being prepared.
Yeah. So it's really important. There's so many. You have some good questions, Melissa. So hopefully this as well as a learning time.
It is a learning lesson.
It really was an eye opener for me when my friends, when I would go to Mansfield for training, and they would tell me all these stories about the reverse mortgage. It's really important that we understand how it works. So on the second half, we're going to cover the downsides of the reverse mortgage, but also really the process and how we go about making a decision.
Okay, wonderful. Well, we'll be right back with Percy Ihara and talking more about reverse mortgages.
Thank you.
We will be right back with Percy Ihara from Generations Radio. If you have any questions or want to be part of our discussion, give us a call at 296-5467. That's 296-5467. This is Generations Radio on AM 690 The Answer.
Did you know 26 million Americans have kidney disease and most don't know it?
The day I was diagnosed, I didn't know what to do. I called the National Kidney Foundation, and the young lady who answered stayed on the phone with me and walked me through step by step. She too was surviving kidney disease, and she showed me there could be life after kidney disease.
Visit the National Kidney Foundation at kidney.org. Now you know.
Moon Physical Therapy is here to help you back to recovery. Moon Physical Therapy is located on Ward Avenue across from Sports Authority. Physician prescribed for motor vehicle accidents, workman's comp, or that body pain that comes from rushing to play without warming up. Also event cardiopulmonary rehabilitation with our one-on-one patient care. Moon's Aquatherapy heated endless pool allows for low-impact exercise with less pain on land. We will give you the right exercises to get you back to health. Ask your doctor to prescribe Moon Physical Therapy. Moon Physical Therapy. We achieve results.
Aloha, this is Martha Clopin.
And Al Harrington. Choosing the right Medicare plan not only saves you money, it also helps you avoid headaches and heartaches down the road.
We want to remind everyone
to listen to a Medicare Moment with Martha, Sundays from 9:30 a.m. to 10 a.m. as we help answer important questions on Medicare so you can stay healthy, wealthy, and wise all year long.
Call me at 543-2073, 543-2073.
I was an addict from the age of 13. I finally decided it was time for a change. I walked into the Salvation Army Adult Rehabilitation Center, and that got me ready for the real world. Now, I choose to be guided by Jesus Christ, and today, I'm building a powerful and promising future, free from drugs and alcohol.
Please shop at the Salvation Army family stores. With our discounted sales, your support through your purchase helps men live a clean, sober, and productive life.
Got Vegas on your mind? Get Vacations Hawaii on the line. Vacations Hawaii offers weekly 4 and 5 night Honolulu to Vegas packages, which include 3 meals daily from $6.99. Stay at Hawaii's favorite casinos: California, Fremont, Main Street Station, and Orleans Hotel. Vacations Hawaii will get you there in comfort on deluxe wide-body 767 planes with complimentary in-flight hot meal service. Vacations Hawaii's frequent flyer program gives you future travel discounts and credits. So if you're ready to win big, call Vacations Hawaii at 591-4777 or visit PointVacationsHawaii.com.
Today, more than ever, we local people are living longer than any other state in the Union, with more seniors, baby boomers, and caregivers. Generations Radio promotes the importance to be proactive as we all age. The radio team will focus on issues facing our seniors and their families, finding resources to navigate healthy aging along with financial, legal, and caregiving information. So join Percy Ihara from 5 until 6 each Saturday, right here on AM 690 The Answer. Focusing on the issues facing our seniors and their families today. Here's our Generations Radio host, Percy Ihara.
Welcome back to Generations Radio. I am Melissa Mansfield, and I am sitting here with Percy Ihara. We are talking about reverse mortgages. However, we first wanted to mention a couple of events coming up. So go ahead, Percy.
Well, as people have listened to the show, we've mentioned a few times, during the college football season, KITV has the only morning news segment. So I say college football because we have our Aging Well segment that's during college football season on Sunday mornings about 6:45 on KITV News. And it's very, very well watched. And every weekend we talk about different things that relates to seniors, whether it's events or nonprofits or information about aging well. So thanks to Mawani Nabarro, the newscaster, and KITV over there for really bringing this out. And so when it's not college football time, I have to mention that, it's during Saturday mornings about 7:45. So I do want to mention that because it's very well watched. And actually, if you go to KITV.com, if you look to the middle right, there's an Aging Well segment. And they can download or look at all the past radio interviews they did on Aging Well. And they're about 3 or 4 minutes, but it's really good information. But as well, we are at our Generations 808 website, where we're going through a change. But in 2017, we're really going to bring out our calendar of events. So if you have any events related to seniors, contact us to the magazine, and we'll be able to post all these events on our magazine website, on our calendar. And then also hopefully by January, we'll have all these Generations radio shows uploaded on our website, because we haven't done it for about the last 6 months. So all these segments will be resource segments you can go back to at our website. So I appreciate my buddy Tim over at Super Geeks, who he just became a partner with. So he'll be redoing our website and making it nice and robust. And he's my buddy he actually used to write for the magazine when he was with the Better Business Bureau. And I didn't know 2 years ago, he took over, he bought out Super Geeks. So I called Tim up about a couple months back and said, Tim, I saw you buy out Super Geeks. I said, I never knew you were a techie. He goes, Percy, I've always been a techie. It just when I was at Better Business Bureau, I couldn't do that full time, but he's always been a geek. And
he's always been a geek.
He's a great, wonderful, nice gentleman. He's a go-getter. But I sat with him for about an hour at Starbucks a few weeks back, and wow, my head was spinning when I left. The information, the wealth of information on how to do websites, what makes a good website, and what the user sees. And so we use our Google Analytics to see what people like, don't like. In fact, I have a referral for Tim because a lady friend of mine this morning texted me. He goes, Percy, who was that website guy name again? So I'm going to refer him out. But yeah, a lot of great, exciting stuff in December and starting in January 2017 with your help, Melissa, to bring this radio show out to the public more. And of course, with our other webinars that we're doing at our HPGS organization as well. So it's been a lot of fun.
Yeah. And now I'm excited for 2017. And I'm really glad that we're putting up the resources for our families and our loved ones in our community to look at and kind of pre-plan what's going on and what to look forward to as 2017 approaches.
Yeah, we got a little delinquent in backlog in uploading all these radio shows on our YouTube channel. And so we're going to do that, and then we'll put a link on our website, the generations808.com website, where they can link that to our show. So
we have Tim now.
Yeah, so Leah, I'm gonna have to ask you to send all those links to our copy radio shows. So yeah, so we're kind of spending November, December to start planning out next year. We'll do more workshops,
setting goals,
and setting goals. Mm-hmm. So it's going to be a lot of work in 2017. So I'm really excited too. So yes,
good. It'll be well worth it.
Yes, absolutely.
So I wanted to ask you. So you said 2003, 2004, you really sunk your teeth into this, and it was
a starting point. Yeah.
Starting point. So why? So what was the need, or why did seniors take a reverse mortgage back then?
Well, I think it was a last resort. So whether it was a financial advisor, attorney, trust officer at the bank telling them, you ran out of money, Melissa, and you need to do something. Well, you can sell your house, you can get a regular mortgage. You can get an equity line or get a reverse mortgage. So typically what they'll do is, well, I don't want to sell my house, Percy. I said, okay, well, that option's out. Well, I don't want to get a regular mortgage because I can't afford that mortgage payment. Okay, that's out. Well, maybe I can get a line of credit of, let's say, $100,000. So let's say I do that, and say over time I take out $50,000, then I take out $100,000. What's that mortgage payment going to be like for $100,000? Oh, about $700-800 a month. I can't afford that. So what's the last option? Reverse mortgage. So we kind of walked them through that steps. Back in those days, that was kind of the thought process. Today, we try to be proactive in anything we do. And so when we counsel people, whether it's the financial advisor, attorney, realtor, CPA, or the client, we don't just plan for today. And that's what a lot of people did. They only plan today. Well, we need to plan to tomorrow. And until you can tell me how long you'll live, we plan to 100 years old, or when one spouse passed away. And then when that one spouse passed away, what's left over for the remaining spouse, and how is she going to live or he's going to live. And then we work backwards from how much reserves you have, how long is that going to last, have they prepared for long-term care. Because I tell people very simply, if you listen to radio show especially, open your left hand, okay? Open your right hand. Your left hand is where you are today. Your right hand is where you're going to die. People are worried about where that right hand is at. I said, no. You got to worry about everything in between.
Right.
Which is living, enjoying life, maybe traveling, spending time with the kids, making memories with their families. And hopefully you don't have health issues. But, you know, AARP's last study that was done, I believe, in 2010 said women have a 79% chance of needing some form of long-term care. And men, it was 69%. That's a national statistic. So when you add in Hawaii's healthy living and longevity, I think it's more like 89% and 79% chance of needing care. So that's one of the things we talk about a lot is long-term care.
Right.
Even though we don't sell insurance, I don't do any kind of financial advising for that. We leave it up to the professionals, but they really need to start thinking about that because it's very costly.
Yes, it is costly. And during my volunteer work, I noticed that there's probably about 1 to 10 men in our exercise class. So there you go.
One? You have one?
Yeah, I have one participant, and he's very willing. You know, he's very popular, of course. But yeah, there's, you know, all these women in the nursing home. So it just goes to show you that we have to prepare. I even told my husband, we were looking at long-term care insurance. He said, oh, I don't need it. I don't need it. And I said, but I do, because I'm going to outlive you.
Exactly right.
And I need someone to take care of me. And I don't have children, and nor would I expect them to take care of me. However, so I am thinking, you know, what am I going to be doing in the next 40, 50 years if I do make it that long? So I'm taking care of me now.
Yeah. Well, you should have your husband come to my workshop, because I'll tell him, what is his name? Can I ask what his
Sean.
name? So I say, Sean, be nice to your wife. Because when you're 70, 80 years old, hopefully older, that she'll be pushing a wheelchair.
Oh, exactly.
So you got to be nice to her. She'll be caregiving you. She'll be controlling your life if she doesn't already, right? But it's really important.
That is true. And we have a running joke. He's like, oh, I'll just get a hot Thai chick. And I said, I was like, no, that's not going to happen. So that's what long-term care insurance is about.
Well, I think, we have one of the best Medicaid programs in the country. Not that I recommend that, but worst case scenario, we see that a lot in Hawaii, where the husband will go on Medicaid, but you have to move out of the house. You don't have a choice where you go or the quality of care. And then when they pass away, mom can stay in the home. And hopefully she has a plan for long-term care. But today it's a whole different world when people look at the reverse mortgage. Actually, most of my clients today are under 7 years old. Or back in the day, they're over 70, 75 because of the last resort. And the reason why they're younger today is because they want to retire or are retired, but they still have a mortgage payment. And they can't afford to have a mortgage payment because they can't enjoy their lifestyle. And depends on their retirement income per month situation or the reserve situation, it can be very difficult on families. So we're seeing more and more, especially we try to get the kids involved. We talk to the kids, say, listen, worst case scenario is you won't inherit anything. Is that okay, Melissa?
No. No, it's fine with me because it wasn't my money.
Right. But you'd be surprised how many still care and
yes, they do.
Tell mom and dad no. And that's fine. I mean, I don't make the decision. It's not my decision we make. And everybody's family is different, And so, but I always tell people, you can't be worried about what you're going to get. You're going to get what's left over, especially if they didn't plan for long-term care.
Right. And now more families are living together, multi-generation homes. So how does that, I liked how you said everyone needs to get involved, because if we're all living together, we all need to understand what the decision process is.
Yeah, that's a very, very good point. And we do see that a lot. Fortunately for you, and fortunately for my clients, I have many years of regular mortgage background. And the reason why I say that, because a lot of people in my industry, the reverse mortgage industry, don't have any mortgage background at all. They didn't come into this reverse mortgage industry being a mortgage professional.
That's interesting.
They were social workers, or they like working with seniors, and they learned the product. So I have a big advantage. So I tell people, yeah, Melissa, if you can qualify for a mortgage, and if you want to live in the home, why don't you do a regular mortgage? Is that an option? Well, can they qualify, first of all?
That's true.
Income and credit. And are you an only child? Because Melissa, if you're my daughter and you got Leah, my other daughter, or my son Stan here, if you want to move in with me, when I pass away, we're going to split it 3 ways. Or are they going to feel good buying out the house, or you getting a mortgage with me?
Mm-hmm. Or someone's fighting within the family. There's
or
all
they
these
say, well,
dynamics.
Dad, I'll take care of you, but I get the house, right?
Right.
We see it a lot.
Yes.
And it does work for certain families. Like I said, walking with a blank piece of paper, we'll go through all the different options to really look at, from a financial point of view, how do we keep this house? Because that's a very good question. I always ask the family, and I try to make sure I talk to every family member, because at the end of the day, when mom and dad pass away, they have to have a plan. What's the plan going to be? Are we going to sell this house? If you live there, are you going to be able to keep the house? And how would you be able to do that? Because if the mortgage is very high, because they took out a lot of money and didn't pay it back for 20 years, that could be $400,000, $500,000, $600,000.
Right.
So it's just in reverse, because a lot of people don't realize on a 30-year mortgage, if you kept your mortgage payment for 30 years, you end up paying 3 times what you started with.
Mm-hmm.
People don't realize that. Don't think about that. So it's the same thing with reverse mortgage. If you kept the mortgage for 20 years, it'll probably be double or triple what you started with. So we always kind of counsel them, use whatever you need and take out the money slowly. So let the line of credit grow, but realize that, what that balance is down the road, because you get a statement every month showing a mortgage balance. And so you won't wake up one day, 10 years from now and say, how did my mortgage balance get so high?
Yeah.
Because we do get calls every week from the family members. Actually, I got a call yesterday morning from one of my clients. The daughter was asking about that. I said, well, look at the statement, and you can make a payment if you want to make a payment. There's no prepayment penalty. You can refinance to regular mortgage at any time as well.
Okay.
So it's really changed. And I think once people understand the differences today and how to use it, it's really important.
Yeah. So, how has it changed over the years that you've seen that growth have changed?
Yeah. So, I'm here as a mortgage professional. I'm not trying to sell anything. So what's interesting is that it's evolved since 2003 when I got in this business, to the point where when I first started, the closing cost on a typical reverse mortgage was between $24,000 and $26,000.
Wow.
Closing costs.
Wow.
Whether you did use the money or not. About 3 years ago, they looked at the reverse mortgage and found ways to reduce the closing costs. So depending on what lender you go through, it could be $6,000 to $10,000 in closing costs. There are companies now where we offer a zero closing cost reverse mortgage today. And that's correct, people. It is a zero closing cost.
I was going to say.
So it's just like a regular line of credit. The banks, all the banks today offer a zero closing cost, right? So we're very similar to that. But I think what's important is that, how does it work? And how do you qualify? But really today is a use. So if you don't use a lot of the line of credit immediately, the closing cost goes ways down. However, if your mortgage balance is higher, the closing costs actually go up. But it's still less. It's still less than the $24,000 we used to charge back in the day. The biggest change happened recently, where in the past we didn't care about income. We didn't care much about credit too. We did run a credit check, but we didn't have income qualification. Today, going forward, 2016, we have income qualification. So it goes back to being like a regular mortgage. I have to get tax returns, bank statements, Social Security award letters, pension award letters. It's a pay stubs if they're still working. So we have to qualify them now, because this is a government loan. People don't realize that it's government loan. So we do a residual income qualifying. And so it's a little bit more difficult to qualify. And the reason why is that they found 10% of reverse mortgages on average nationally were in foreclosure.
Oh.
Because the borrower could not pay their property tax or their homeowner's insurance. You know, with Hawaii, we're very fortunate. We have the lowest property tax in the country.
Yes.
If we didn't have hurricane insurance, our homeowner's insurance would be the lowest in the country.
That is correct. Yeah.
So we don't see too many foreclosure in Hawaii because our values are pretty high. But yeah, so they want to prevent people going into foreclosure. So that's why they have income qualification. They have to qualify for a certain amount of residual income after they pay their property tax and homeowner's insurance. So it's very critical. But if they don't have enough income to pay that, we need to make sure they have reserves, savings, or they have to have a big line of credit to be able to pay that property tax and insurance. So it's a little more critical underwriting. So like I said, because of my mortgage background, it's pretty easy for me to qualify them. But people that didn't have mortgage background might have a little more difficult time how to read a bank statement, how to read the pension statement, how to read the tax returns.
So what is the minimum qualification for income?
Well, like I said, if they have so it's what's called a residual income. So let's say they have $1,000 a month, and it depends if it's a husband and wife or single. We have residual income. So what's the property tax minus out the homeowner's insurance, and then cost of living allowance, and they have a certain amount left over after that.
Okay.
If that residual amount's not there, we have to look at for compensating factors.
Okay.
So today I'm a mortgage banker. I represent Liberty Home Equity Solutions. We're one of the largest in the country. So we actually pre-underwrite every file that comes in. I don't know of too many lenders in the nation that does that. And the reason why we do that is we want to make sure they qualify. So we don't go and spend money on appraisal and they don't qualify. We guarantee that. So for a lot of other lenders out there that do not do the upfront underwriting for full approval, they could be in jeopardy if they don't qualify. And that borrower could be out money on their appraisal.
Right.
And appraisals cost you from $600 to $1,000 depending on the value of the home. So we pre-underwrite everything. So that, to me, that's the biggest change. When I tell people there's income qualification, they go, "What?"
Yes, it's kind of scary. You're thinking, do I have enough?
It's easier to qualify, but like I said, if they have reserves, if they have a large line of credit, it's pretty easy to qualify. But every case is different.
Yeah.
But then the biggest issue, like when you mentioned earlier, is the quality of the condition of the home.
Right.
We allow a certain amount of deferred maintenance as long as it's not a safety or health issue. So it's really important. I need to inspect the house. I'm not an appraiser, but I just want to look from my own experience what conditions our houses will be in, because like we saw a house in Kaneohe, we saw a house in Mililani, they had really bad mildew. Mildew is a health issue to the point where we couldn't do the reverse mortgage. We had to gut the whole bathroom and the room because the mildew was so bad.
Wow. Is that like the black mold or is
Yeah. And if it gets really bad in the living room, if it goes behind the walls, we can never do that one. They'd have to tear the whole thing out or re-gut it. So property issues is really important. Like I said, the lady this morning talked about her neighbor. I said, I need to take a look at the house because, we don't want to move forward on anything. We're not 100%, kind of close to 100% chance we can do do that.
Exactly.
Yeah.
Yeah, it has to be safe working conditions.
So it's really important. But, so I've been doing it long enough where I can talk to people over the phone. Sometime in January next year, we'll start doing workshops again, because I was known for doing a lot of workshops, a lot of ads back in the day. I haven't run an ad in over 3 years, and it's amazing how many people I still see in the paper. It's been 3 years that I've done an ad. You know?
So we talk about using the reverse mortgage for health, not health, but like healthcare services. I hear the word aging in place everywhere. So a lot of people are taking out maybe reverse mortgages so they can age in place successfully. Can you talk about that?
Yeah, when I did workshops, I was called the understanding reverse mortgages, and not a whole lot of people would come in the beginning. Then I started changing to aging in place and a reverse mortgage, and people would, okay, there's a connection there. So, we do our aging in place workshop. This year, 2016 was our 10th year doing it. And the reason why that's going to be prevalent is because when we go to workshops and I say, how many people here want to go to a care home? Nobody raises their hand but me, because I probably will end up in a care home. And I live close to Arcadia and a few other plazas, so that's probably going to be my future. And because I don't like mowing the lawn. I don't like
picking
taking a
weeds.
chance.
You don't love taking all that.
My goodness.
No, I agree with you. I'm right
No.
there. I'm like, I put me at the plaza. I'm happy.
Yeah, I don't have to drive. That's one of my big pet peeves.
You get your own.
You can pick me up once in a while,
I will.
But I don't like driving and parking. I always come early for parking, Miss Leah. But healthcare and aging in place. They did a survey in 2006 by AARP, by the way, and you can't find it on the website anymore. But I have the survey, and in their survey, they said the number one reason why people were using the reverse mortgage funds was healthcare. Second was long-term care, because people want to stay at home.
Right.
The amount of Medicaid people is not really big when you look at hundreds and thousands of families here in Hawaii. So most of us, 95% of us, want to stay at home. But from a financial point of view, I hope your house is not falling down or have termite damage. But it can be very costly to repair, maybe buy a new car, pay for insurance. But the really thing is paying for long-term care. You work at Ultras Medical. What are you charging? $22 to $25, $28 an hour, right? Most people.
Oh, for
on
the
average
bill,
for
yeah,
home care.
yeah, for that.
Yeah. So, and if you have an RN, it's over $35 an hour.
Absolutely, skilled nursing.
So it can be very costly. So we talk about aging in place. What's the things that you're going to need to do to be able to stay in a home and age in place? And so it's really important for families, and if you're a baby boomer taking care of your parents, to really understand, plan to the day they die, and plan for the worst case scenario. Because if they don't plan for the worst case scenario, because a lot of people, don't think they're going to get sick, or don't think they're going to get Alzheimer's, or don't think they're going to have a stroke or aneurysm, the chances are a lot higher than not having it, unless they really are healthy. But the downside of being really healthy is what? You're going to live a long time.
Right.
Right?
Yeah, age is the number one factor why people get Alzheimer's. Another thing I wanted to mention is we have a housing shortage. So we might not have an option to move into, the resident plazas and the kahala nuis, so we will be kind of forced to age in place.
Yeah.
Because there's no beds.
Yeah, we have the national statistic in 2008 was 48 beds per 1,000 people.
Mm-hmm.
We have less than half. We only have 22 beds per 1,000 people. And
that's scary.
Very scary. Well, you know what we're doing next year, right? We're going to have a job fair, right?
Yes.
Why? Because almost every home care company, every nursing facility, every retirement facility are having shortage of workers.
It's so hard.
So that's going to be
find.
really key.
Mm-hmm.
Like I said, to your husbands out there, be nice to your wives because they don't want to be taking care of you. But it's really important. Long-term care, I talk about that a lot because that's the scary thing.
Right. Long-term care services, just not having those resources, the workforce.
Well, understanding that you're going to need long-term care.
Absolutely.
The resources are there and they're in our magazine, but people need to start planning for that because I get calls every week from people that I know or friends my age that are caring for their parents and they're struggling.
Yes. Yeah. They call me. I hear the desperation in their voice. They need someone now.
Okay. So ask me one last question that you would want to know as yourself or as a senior about the reverse mortgage.
How soon should someone start thinking about reverse mortgage?
I would tell you, depending on the financial situation, whether they have kids or not, really to start thinking about at age 60. And then you got to think about when you want to retire. So hopefully they're working with a financial advisor and start planning that out because you can have a heart attack at any time.
Right.
And skinny does not mean you're healthy.
That's true.
So people need to start planning to the day one of them dies and the one remaining spouse dies, what's going to happen? Because that's the scary part. I get people panicking saying, we need it now. So it's really important. But, aging in place, living well, it all goes together. And we need to start just moving the envelope and opening the envelope more and talking to our families during this holiday season about aging because it's a problem that I think we can solve as long as we plan ahead.
Right. And we have to get comfortable with it because we're all going down that road.
We're all going to die. We're all going to die.
We're all going to get old.
Yeah. So anyway, Melissa, thank you so much.
Well, thank you, Percy. And you have a wonderful weekend.
And this is December and great time of year.
Getting trees and presents and sharing time with the family. I think
that's really what it's going to be about. And look out for the December, January issue, which is going to talk about family values and traditions and morals and just family. So look out for that coming second week of December. So thank you, everybody. As always, aloha and live well.
Aloha.